Hey, good morning. Good morning. Starting just a moment or two early on the YouTube side, just trying to continue to work out some of these bugs. Um, it's been streaming issues, and we're working on it. Hope to get it resolved soon. It's becoming a bit annoying. Still appreciate you know the amount of people and continue to show up and the feedback we get. So thank you for that. We'll just keep plugging away at it until we finally get it back on track. Hey, good morning. Good morning. I will be watching to see if the sound gets bad. You just let me know. It When we went back and reviewed what happened yesterday, Restream started to repopulate the browser that I was using, and there was like 30 instances of that browser running, and of course that just bogged everything down until it quit working and froze up. So we're still working on it. I was dealing with the Restream tech guy for about 3 hours yesterday. They've never seen anything like it. They don't know how to fix it. So we just keep working at it and see how far we go. Before we get into the morning briefing this morning, I wanted to point out something that we recently integrated a bot onto the Discord, and the one that is the most expensive is obviously the one that is the most powerful. Um, this morning, to kind of highlight the power of this thing, I was using it just on Apple and only for particular option questions. And I started asking it questions, first starting with what was the dark pool prints from yesterday on Apple and where were the two biggest ones, and were any of them at the ask or above or at the bid and below. There were two really big block trades at the ask. I say really big, but really it was just the one that was big, and the other one was kind of, yeah, it's all right, it's not too bad. 1.2 million shares. It's a pretty good size block trade, and that was at 173.11 Apple stock price at 3:30 in the afternoon. So what I do with these is I put them on the Apple chart. So then I made another call to the bot and asked it if there was any major levels, since I'm going to go right on my chart anyways, that I need to keep track of that perhaps wasn't a part of the prints from yesterday. And I get these dark pool levels. And you can see 4.9 billion at $1.65. So Apple 165.44. There's going to be some dark pool support there. We're not talking about like guarantee. There's no guarantee in the market, but that's a major level of support. These are different density levels of that same kind of dark pool already on a chart, but I want it on my Thinkorswim, right? So I go in and draw the lines myself. These are just bot commands, right? You type in the command, the bot gives you what you want. There's the IV and the IV rank for Apple, and I know that this one is really hard to see. I always have to like cut this one out and take it to another screen to be able to see it better because I just want the latest values. But that's a 30-day IV rank when most platforms do like a 1-year rank. The whale watcher, those 155 strike options really lost their premium in the last few days. And I mean, that makes sense, right? That's kind of what we expect. But those 170s have really picked up, obviously, right? Because we crossed through that zone. And the rest of them, they've just been kind of bleeding out it's kind of what we would assume. Um, these are the 5 strikes that had the most activity. And if you take positive minus negative premiums, right, then that's the number you end up with. And then, of course, the higher the number, the brighter the box. So those 165s for December 16, I mean, they really stand out right there, right? And of course, the 160s for December as well. Here's the 819, 175s, a lot of short calls there. 172.5, a lot of short calls there. And then we get into the 170s. That's positive, positive, positive. 271K at that 160 level. That'll be coming into expiration this Friday. And then, of course, you use the bot, call up some near-term support and resistance. This is a 1-hour chart. So I called it and said, give me support and resistance for a 1-hour chart. And then, of course, I want the bigger picture. So you get support and resistance for a daily chart. And if there's any technical signals going on right now in Apple, I want to know what they are. So I called it out. It's above the 100, above the 200, above the 20, above the 50. It's got a MACD divergence on a monthly high. Stocks are overbought in a strong uptrend. Short, sweet, to the point. I didn't have to read an article to get there. I just called the bot and said, hey, give me any signals you have for Apple right now. Simulated projections on the expected move over the next 5, 10, 15, 20, 25, in the next 30 days. Really great for like your iron condors and things like that. And then these last two commands would work differently if you did them compared to when I do them, because I have a particular bot that changes my charts around. But it would actually perform technical analysis for you if you put in CD Apple. It would draw trend lines and pop up with Bollinger Bands, and it would do a lot more technical analysis for you. But yeah, use the bot, guys. We spend a lot of money to integrate this bot, to buy the bot and have it in our Discord. And this is just one example out of many of how that bot can really help you out. These are the levels that I drew on Apple just from calling that bot. I usually do this in the mornings. I get up, I got my coffee, I go in and I call the bot on a couple of the bigger names, like the monsters of tech names. And I just come in and I draw the levels from yesterday. That way I don't have to, if you don't kind of keep up with it, it'll just get overwhelming and you'll have way too much work to do. So I just do it a little bit at a time. Those levels really provide a little bit of insight, right? So use the bot, guys. That's kind of the point, right? It is expensive, and a part of your subscription at the Bullish Bears pays for that bot, right? You bought it, you may as well use it, get your money's worth out of it. All right. So, anyways, back to it. I have this sneaky suspicion that we're going to continue to grind towards a major moving average on the S&P. You can see how we have that 200 period moving average there. I really think it's going to act a bit like gravity, and we're just going to get sucked into it until we finally get to it. Now, after we get there, you can get the Ouija board out or roll the dice or, shake the magic 8-ball and see if we're going to stick around or not. But I just got this sneaky suspicion we're going to continue to grind and grind and grind until we get to it, because we're too close. Now, the thing about moving averages, especially those bigger ones like a 200, is trying to identify, should we use an EMA? Should we use an SMA? Gosh, I don't know, right? There's always this conflict of, well, which one should I use? If you notice right now, I've got two purple lines. One is an EMA and one is an SMA. So obviously, we've already passed through one of them. You wouldn't have to worry about, well, which one should I use? If you're looking to see which one we're going to hit, we already passed one of them. So we're not going to hit that one. The EMA is over our head. The SMA is not, or vice versa. All right, we go in and take a look at which one it is. Yeah, the EMA is over our head. The SMA is not. Right, so don't get too hung up on it. When it comes to those bigger ones, the 20 or the 50, the 200, the 100. I often look at both just because I know that a lot of traders are going to look at one and a lot of traders are going to look at the other one. And all we are all trying to do is figure out what everybody else is trying to do, right? So that we can either avoid them or trade against them or ride the waves that they create. So I want to know what other people see when they look at the chart, which means I need to know what moving average they're using. And since both moving averages are popular and that they're very far apart, then I want to look at both. When it comes to a smaller one like a 10, a 20, oftentimes those are so close together, I don't care. I just use what I like instead of what I think others are using. That 4,300, we continue to test it. If we're going to get to that 200 period moving average, we're going to have to obviously get through the 4,300, or we're going to have to linger here long enough for that 200 to come down. I don't think it's going to come down. Tomorrow we got the FOMC minutes coming out, and this is kind of a big deal, right? When Powell comes out after their meeting and he starts chipping his teeth, he doesn't go in to exacting detail about everything that they talked about, right? He doesn't go through vote numbers and go through the dot plots and give us exacting information. That's what the minutes are going to do. The minutes are also going to give us hopefully, real clarity on exactly what the Fed wants to see for the rate hike that they're going to be using in September. Now, looking at the Fed Fund tool, it seems to be around a 60% probability that we're aiming for a 50-point rate hike, but that can change very fast, right? So, on a day to day basis, especially tomorrow, those probabilities are very likely going to change drastically. And we're going to be looking for what data points the Fed is likely to hone in on between now and then. And then you're going to want to go in and look at the market watch and really have a clear idea of, okay, suppose they say they're looking at the CPI numbers, which of course they're going to look at the CPI numbers. When is that CPI going to come out? And notice there's a CPI today. Well, that's for Canada, so that's not going to do us any good, right? But you have to be specific enough to actually focus on where's our CPI? What day is that coming out, right? And that way you're prepared for that one before it gets here, that you don't go long or go short 2 days before CPI comes out and get run over like a freight train. Right now, we're looking at finance juice. We want to see anything along the side. If there's any speakers today, like the president's going to be speaking at 3:30. We're going to get gas numbers in the later part of the day too, but it's going to be so late in the day that I doubt that it's going to have much impact on our trading. Nothing else really stands out within the European market wrap, and there's still been some pretty good size moves in the FX market. So I would continue to keep your eye on that. Right, that surprise rate cut from the PBOC yesterday. Um, is like the one that most immediately comes to mind. For today, once we get past the lunch auction at 11, we're pretty much smooth sailing into the afternoon. Just keep in mind, tomorrow we do have those FOMC minutes coming out in the later part of the day. It's retail week, basically, so you want to continue to keep your eye on retail. For the ES this morning, our expectations, just like every morning, is based on the idea that we can hold the range, we can advance and break out of yesterday's range, or we can decline and break down out of yesterday's range. It always is, right? That's the only three things that this market could ever give us. And it can combine those too, obviously, right? It can be any mixture or combination of. We are above last week's high still. So we stuck it yesterday. We kept it. We just got back above VWAP. Recognize the chop for what it is. We've got a very, very narrow overnight Globex, right? The IB, the initial balance, is recorded within the first hour, right? So it's like an opening range. Only open ranges at 9:30, and you get to choose how big of an open range you want. Some like a 5-minute open range, some like a 15, a 30, a 1 hour. The IB is always 1 hour, and it's always at Globex, right? So if you were to mark out the 1 hour IB from last night, it was really, really narrow. And then if you mark out the overnight session, it also is really narrow. Considering that what we've seen in the last, say, two months, right now we've got an ADR of like 1.5%. This market, as it continues to advance, the volatility is decreasing. The size of the moves on a day-to-day basis are decreasing, and we're going to continue to see that decrease until we get back into normalcy eventually someday, right? By normalcy, I mean pre-COVID, the S&P would move around like 30 points in the entire day. Imagine that, right? For anybody new to trading who came in, say, after COVID, who's never seen the ES on a day-to-day basis make a 30-point move. That used to be our norm, which is why I like trading the NASDAQ so much. Because I mean, if you want to trade, you got to have something to actually make a move, and the ES just normally doesn't move enough to suit my taste. Now we get more than enough movement. We're still above the daily pivot point, and in fact, we haven't hit it this morning at all, which gives us an MDP to missed daily pivot. It's actually a trade strategy that goes to that. If you were to Google it and hunt it down, it's a little older, old school kind of trading strategy, but it still fits. It still works. A lot of those old ones are classics. If we were to fade off this morning and retest the lows of yesterday, that would also have us testing the 23.6 pullback, right? There's a retrace line there. But we would still be inside day at that point. If we continue to fade and look for an inside day breakout, it lines up um, beyond the ADR. The ADR half is at 42.61. The ADR full is at 42.28. And the low of yesterday is at 42.48. So about 20 points lower than the half ADR, but about 40 points higher than the full ADR. The weekly pivot point is below all of that, right? So we could fade down all the way to the 38.2 retrace, and we would still be above the weekly pivot point. And as long as we're above that weekly pivot point, we're considered bullish, right? We can be in a near term pullback, or we can have a bearish day while being in a longer trend, bullish trend, right? So as long as we're above that weekly pivot point, we're still bullish. We can just have a slight pullback, right? Another way to look at it would be the kind of language they use when we analyze a MACD. So primary trend is bullish if we're above the zero line. Primary trend is bearish if we're below the zero line. Even in a primary uptrend, when we're above the zero line, you can have a short-term secondary downtrend if you get a crossover signal. Right? It makes perfect sense. So same thing, if you use that same kind of logic and that same kind of language when you're focused on pivot points. If we're above the weekly, then we're in a primary uptrend. And if we break below the daily, then we're in a secondary downtrend. Aha. I like that stuff, right? Yeah, you like it. There is no expectation that we're going to be bearish today. We're barely down at all, kind of flat. And the market right now is really worried about Friday. We've got OPEX Friday. A lot of premiums are falling off by the end of the week. And we have FOMC minutes tomorrow. So there's just a lot on the table. And it kind of is reflected also by how far we've run, right? Right now, the risk is that we're going to continue to go up because we kind of need to pause here, right? It needs to take a breather. Now, the good thing is we haven't gone crazy parabolic, and that really is important because we don't want to see things start to get out of control. So we're not getting out of control. We continue to see an improving uptrend. And just like a typical improvement, once we've been down for a while and we're on those lows and we start working our way back up, well, market doesn't go straight up. It needs that downturn, right? So in the overnight hours, we get the pullback. And then in the daytime, we get the run. In the overnight hours, we get the pullback. And then in the daytime, we get the run. You know what I mean? Like it's perfect sense. You got to get the pullback somewhere. And sure, I mean, it can happen in the daytime, but in a in a primary uptrend, you're more often or more likely to see those pullbacks in the overnight hours and then the advancement in the intraday. So a little bit of weakness this morning really doesn't imply much. It's not really the weakness that's getting my attention. It's the lack of participation or the lack of movement. I mean, we really just ain't going nowhere. On those downside pivots, the close of Friday, which would be the previous week high, basically, because we closed at the high Friday. The high of the pivot point from yesterday around 10 a.m. kind of lines up well. We're going to go check volume levels there in a minute. The RTH of yesterday and then the low of yesterday, those will all be pivot points that we want to focus on if we make that bearish move. Really just don't have any expectations we're going to be bearish, but still, right? As long as we don't break outside of yesterday's range, we're not going to even see this as negative in the market at all. We're not going to try to take long-term swings or anything like that to the side. If we get bullish again today, which is on the table, there's really no reason not to think so. Then we'll focus on breaking the high of our own Globex at 4,300. Then the high of yesterday at 4,304. Then we'll focus on the ADR half, 43.27, and the ADR full, 43.61. Now with that, I kind of like having some levels, right? One of the levels that I would throw up there is use the quant tool. Started at the top of the Globex, hit the bottom of the Globex. That gives you some pivot points to focus on. The 50% line here is 50% of all of this. The 200 here is 100% of all of this, right? So it's just measuring that range and then plotting out 50% of it and 100% of it. Nothing really complicated there, right? So that gives us kind of a midpoint between, say, the high of yesterday and the ADR half, right? That way we've actually got levels worth hitting or levels to focus on. All right, so we're looking at a 10-day, 30-minute volume profile and a TPO profile. TPO is time-based, right? We got volume by time and volume by price, basically. That's what we're looking at here. We are well outside the box. When we're outside the box, we have an expectation that we're going to go back into the box. We've got some volume support right around that 4,300, and we've got a TPO right around that 4,300 because we've been spending, quite a bit of time there in the last few days. Below that, we've got some emerging volume around 4,280-ish. Should we break below that, we got a shallow area we're likely to move through pretty quick. So that pivot at around 4,260, I wouldn't look for a lot of help there. If we break that, we're very likely going to move through that zone very fast. So the pivot at 42.50 is worthless. I wouldn't look to get any help or any support out of that. We don't find any help until around 42.33. And then beyond that, we've got the value area high at 42.06. And that would get us back inside the box. The point of control for both of these profiles are way too far away to be of any value. Now, through the day today, we're going to lose Tuesday's data from back here, right? And then obviously tomorrow, we'll lose Wednesday's value, but we're still going to have Thursday and Friday. So we're still going to have a significant level of volume. The question is, are we going to pick up enough volume at these levels to overcome the volume from basically an entire week that we spent down there and start to move that volume point of control up? The reason I lay these two side by side is because I want to see, hey, did we get a significant level of volume without spending a significant level of time at one spot? Visually speaking, suppose up here at the very, very top, 43.04. Suppose we saw a huge amount of volume there, and yet we had no time spent there. Well, that would show that we landed into a pool of liquidity, right? That we filled this massive amount of volume that was just waiting there. And the time thing would tell us, oh, yeah, we barely spent any time there at all. We ran up, hit a ceiling, and landed in a pool of liquidity that we couldn't work through and took a rejection. Now, clear across the top, that would be very easy to see. What's not always so easy to see is other areas, right? Say like a pivot point right there or a pivot point right there, where we spend a minor amount of time and yet we may find a significant level of volume. That's why I like using them both. We can bring forward yesterday's value area low. I generally don't, but right, if you were to study volume profile, that's what they would teach you. Take yesterday's value area low and value area high and point of control and plot them forward into today's price. Once we've hit that, then they consider it touched and it has less validity, not no validity, just less validity, right? The more often, more times you pass through that pivot point, the less value it has. So until we've touched it, it's worth bringing forward. I just don't because I've got enough pivot points. If you notice the value area high, for an example, from yesterday, well, it's right at yesterday's high. I'm already marking yesterday's high. I don't need to bring forward that value area because I would have already marked it. For the value area low, I would have already marked yesterday's low, and yesterday's low has more value to me than that value area. I would be fine not bringing it forward, right? But to each their own. There is an untouched point of control around 42.30, and we've got a significant level of untouched point of controls below us. When we do start breaking back down to the downside, having kept track of all of those untouched point of controls is going to offer you a lot of value because when we do hit into that level, you're going to want to know it, right? You're going to want to know, what did we hit when we suddenly just turn around on a dime, bounce off something when you could have seen it coming and avoided it, or seen it coming and took a trade and traded the bounce. Really helps out, right? While I'm on this screen, I'm going to point out Friday when everything was just going crazy and everybody kept trying to short that. Look at what this magnetized signal was showing us. Pure bullishness all the way across the board. It never fell out of the red. This thing never said go short. Now, I was doing write-ups all through the day on Friday telling people, don't short this thing. Oh, but it's already run so far. No way we can keep going now. Oh, yeah, we can. Don't short it. That was the 786 on the daily chart, and we made it through there anyways. But the RSI Laguerre stayed magnetized through the whole thing, and the gamma levels showed we had plenty of juice to keep on pushing. We had that J hook up with a high gamma level for the breakout It stayed magnetized the whole day. And when it got into exhaustion, we didn't stay there very long before we came right back out of it. And we were back in the green or back in the go or back to juice. We had flow. There was a lot more to Friday's levels than that. It just really stands out. All right, yesterday we've seen some pretty extreme moves in the market. And even this morning, we're getting significant flows in oil again. One of the biggest things that got my attention yesterday was the VIX. This thing was making significant moves yesterday, and there was absolutely no recourse, right? We didn't see this reflected in the stock indexes at all. When you see a massive sell-off in volatility like that, you would anticipate some sort of reaction in the market somewhere. Got nothing. But we are below really important levels, right? So here's year to date. And there's a 1 year. At the start of the year is pretty close to 18 half ish, right around in there, 18 and a quarter. We're getting really close to 20. We're getting close to those levels that changes a lot of dynamics for firms out there. See, some firms really have their hands tied. They're not allowed to get into this market if volatility levels are at a certain point. It's like a safety feature that they have. So a lot of them have been wanting to buy the dip and participate in this rally off the lows, but they've had to sit out because if the volatility is too high, their metrics tell them, hey, you're not allowed to get in. You have to just buy. And that doesn't mean that they can't get in at all, but they may have to use options or they may have to use bonds, right? Like Amazon bond, Apple bonds. They may have to approach it kind of like through the back door rather than just coming in with their full flows. These volatility levels get low enough, we're going to start to see the institutions across the board because there's a lot of different kinds. When we say they and them, and well, there's a lot of different ones out there, mutual funds and retirement accounts, and even just small firms, right? So it's an important level to really keep track of. The the I don't know the word I'm looking for. The oddity, I guess, is a good way to say it, is the skew. Skew ties in really, really well with volatility. They're like hand in hand. Peanut butter and jelly, right? Ketchup and mustard. Skew is really important. And the skew levels, I mean, it's about to leave the chart. We're getting up there. Think of skew, do a generic, really quick kind of summary. What's skew? Um, the anticipation that a trader has that the market can make a two standard deviation move. That's like a generic concept of what's skew. But that's only one side of it. How do we kind of monitor that? Well, it's monitored by looking at what's traded. So if you look at the SPX and you think about calls versus puts, supply and demand, puts are generally speaking more expensive because people don't fear a market going up, they fear a market going down. Puts are in demand. That makes their prices go up. Generally speaking, we sell calls to pay for those puts because we're just buying insurance, right? We don't want to buy insurance with money that we care about. We want to buy insurance with money that we got from something else. Well, the something else is the calls that we sold. So generally speaking, if you sell a lot of something, then you've got a very large supply sitting there, right? Everybody's selling it. Everybody wants to sell it. There's a lot of it there to be sold. but on the other side, on the buy side, everybody's buying. This creates skew. So it's the implied volatility levels of the out of the money puts versus the implied volatility levels of the out of the money calls. Implied volatility on a stock chart focuses on movement from close to close. It's just nerd word for movement, volatility, candle close to candle close on a stock chart. But volatility in options isn't from close to close because we're not going anywhere. It's not a candle. It's from ask price to ask price or from mid to mid. How much is the option changing in value? That change in value is what they use to validate or mathematically define volatility within the options. So volatility is going to go up more on the puts since everybody is clamoring to get them and there's a supply and demand issue there. And that's skew. And the greater the disparity between these two, the greater the skew level. The VVIX is like implied volatility for the VIX. How volatile is the VIX right now? Not that bad. We're getting back down into some normalcy when we think about, well, how volatile has the VIX been since COVID? The VIX, it's been moving around pretty good. Now it's moving less and less and less. Well, think of that move that we just saw yesterday. It's what I was talking about, right? That really big move that we just saw in the VIX yesterday. That was a significant move. This is saying that the volatility in the VIX is continuing to decrease. I don't believe it. I sure don't feel it. And then that move in the bonds yesterday. The bonds made a significant move yesterday in the bonds. The move index is volatility for bonds, basically. And this says that volatility went down significantly. Really? Because yeah, I didn't feel that. So this continues to cause concern. Keep your eye on the levels. We've been seeing these things move around, and there's an expectation, right? When VIX falls or when VIX rises, we anticipate that it's going to make something happen, like if A then B kind of thing. When it's not doing that, what are we supposed to do? Recognize that it's not doing it and put it in the category of when what should happen doesn't. WWSHD. That we point it out and we say, okay, well, this is happening, but it's not doing X. So keep your eye on it. Maybe we approach with a smaller position size, or we use a tight stop, or right, you know what I mean? Like, it's not that we don't trade, because I don't like that answer. It's that we just approach with more caution, recognizing that, hey, this thing is happening and we're not seeing the results that we should see. Bitcoin settled back down after a little bit of a spiker pop, and gold really sold off, and it's just been kind of holding those levels. Remember that they've been using gold for an inflation hedge, just like they were using oil or energy for an inflation hedge. Generally speaking, we expect to see this bigger macro dynamic with energy continuing to weaken as tech continues to strengthen. And if that starts to flip around, then it's going to be this counterbalance. Energy is going to start to strengthen and tech is going to start to weaken again. We're not seeing it yet. Right? But when you look at last week, the sector movement within the entire week, energy was number one on the list. Energy moved more on the week than anything else did last week. Did you notice? Or did it sneak past you because everybody was looking at tech? So keep your eye on energy. We've continued to see really big moves in there. And while it's not yet impacting the rest of the market, I wouldn't expect that to stick, right? At some point, volatility or energy or the bonds, and even that really big freaking move in the dollar yesterday is going to push impact into this market. Just because we didn't see it yesterday doesn't really stand out to me. I'm going to continue to watch this. I urge caution. Watch these four metrics. We're still inverted on the 210, by the way. Not much of a surprise there. I believe it's past 50 now, or pretty close to it. Not just in Apple, but in a lot of the names out there, we're getting up into a significant level of resistance. Keep in mind that until Friday, when we get to OPEX, there's still going to be a lot of flows just pushing to the upside, grinding us towards that level that we had in the S&P, right? That 200 period. So American Express got that 200 overhead, and it's not too far away. Boeing as well. I was looking at Boeing yesterday. We were continuing to get these higher lows and equal highs, right? Those sellers are really defending that level. But we continue to hold, and it's tightening up, right? So we're looking for a pretty good size move here. Boeing is up this morning. It's got a mid price of around 171 ish. So we're already working our way up this morning to break this level again, or to test a breakout in this level again. We'll see those wicks, see if those sellers are going to defend this or not. We've been inside day here. We've now got an IX10 on CRM, and that 192 is a real strong level that we're working on. We don't have any flow this morning. It hasn't made any, we got nothing yet at this point. But I'd be looking for a breakout this morning. See from where we closed, if in the pre market we can get up above that 192. Remember, a market likes to jump the fence in the overnight hours when nobody's looking, right? So if it can get above there in the pre market, then we'll be looking for it to bounce off of it as a support level and take a run towards that 194. It's not a really, really tight range, but we were inside day yesterday in Cisco Systems, and we closed right up there at the high of the day. Now we closed the same way the other day, right? We closed there, and then we opened here, and after all that running around, we still managed to close right up there at the top again. So I would be looking at Cisco Systems this morning, see if we're going to get that follow through. Eventually, the if we don't dump off of that 46 low, the target in this is going to be to close that gap at 48. So it's a pretty decent move. It's about 2 points, right? Just, be careful with that earnings at the end of today. Now, we've been talking about energy being so strong. It was the biggest mover last week. Chevron bounced off of the 50 period yesterday. And I guess we could say, well, hey, at least it's above the 50. Yeah, okay. That's considered healthy. But that's about all we could say. Hmm. Odd that my labels aren't popping up. Hmm. Oh well. Dow Chemical. We're looking for a Busby here. Going to see if we get that pullback to a bounce off the 50 or not. But we did get above the 50. So that's a good start. We got the gap closed. And looking at yesterday, that gap close may be doing its job and actually providing a little bit of support. If we lose that thing, we're going to look to close that gap to 54 and then maybe get back inside that range again. We were inside day Friday to Monday, or Thursday, Friday, and then Monday, but we have this outside day yesterday. Now, an outside day can be bullish or bearish depending on where it lands, where it shows up. In this context, to me, I'm bullish with it. We had that cross above the 200 and we stuck it. We didn't fade back off of it. We're not overextended from our moving averages. I think Goldman Sachs is primed up for it. Now, finance has been a little weird, and it makes sense because of the move that we've been seeing in the dollar and the move in the bonds. So maybe kind of approach with a little bit of caution. We're going to try to approach it from another set of moving averages. Now, I was listening to Bloomberg this morning on the Home Depot numbers. I didn't keep track of everything, but we seem pretty stable after all the running around. So they weren't horrible numbers, but looking at this, they weren't super great yet either. And I don't see the phone symbol, so maybe they haven't finished. I would check a little bit more on that before we get to messing around with Home Depot. Honeywell's getting up into that zone. I don't think that zone is too relevant anymore. Watch the 205 in that. We expanded greatly off of that 200 in the last few days. And I had someone ask me, "Hey, can we short this?" I mean, you could, but you probably would want to wait for it to at least slow down, right? Don't get hung up on that idea that, oh, well, it's run so far. There's no way it can continue to run now. Yeah, it can. Price can do whatever the hell it wants. So, at the very least, wait for it to show a sign of slowing down, that momentum is fading out, that inertia is coming out of it, that it's no longer in surge mode before trying to short this sucker. IBM just about has that gap closed. We may get it today. It's at 137 and we're at 135 basically. We get another big move like we did yesterday, we could get close to getting it, but that 50 period is there. We were inside day, and it looked like we were going to get an IX10 on Intel, but we did manage to close outside of the box. So now we want to watch this really close to see if we're going to get that continuation. And looking at the pre-market, we're off slightly, right? So we've started to fade down a little bit. And Johnson & Johnson had that hard break last week, which thankfully I did not get filled because I was trying to trade a bounce here. I thought we were going to bounce back up, and I tried to go long, but I couldn't get a good feel. Never got my trade, and then it fell out of the bed anyway, so I'm glad I didn't get it. Maybe starting to get that reversal now. JP Morgan kind of ties in with the Goldman trade. And Coke, you know what? Coke had that expansion yesterday, and we took that rejection across the pivot point. I would be looking to see if this is going to fail. We've got a very minor wedge here. Make or break. Coke just, it's got to get out of this range at some point. That IX10 lasted almost 2 weeks, however. So now that it is starting to expand, it could very well, you know, continue to expand quite a bit. It built up a lot of energy, I guess is another way to say it. Now it's got room to burn. McDonald's, double top. Looking for a follow through with this today if it's going to make or break. Notice all the names that I'm hitting are all just in the Dow. I have people ask all the time, "And what watch list do you have? Do you have your own watch list?" I mean, I do have my own watch list, but a lot of times I just use the Dow. They're all household names. Even your own children would recognize most of the names in that list. Mostly liquid, right? I mean, liquidity's been a little rough on the option side everywhere, but you know, mostly liquid. What we're looking at here is the comparison between consumer frivolous spending and consumer staple spending. When this indicator is pointed up, frivolous spending, or they say discretionary spending, is strong. And when it's pointing down, then staples are strong. Well, as you can imagine, as we've been rallying up off of those lows from mid to late June in the S&P, that we've been getting a turnaround in consumer discretionary. Now, consumer discretionary is a broad house to kind of walk through. Cruise lines, resorts, casinos, um, Tesla cars, everything in that consumer discretionary says that households have money and are out spending it. They're out spending on things beyond just staples, right? They're not just getting groceries and paying their bills, but that they're out having fun, going to the movies and casinos and cruise lines and Starbucks. And the XLY, consumer discretionary, is a risk on sector. And we look at this comparison as um, offense versus defense. Right? We're still in an offensive market, but it curled over a little bit yesterday. Looking at it on a weekly perspective kind of helps clean it up a little bit too. It's the same indicator, just a different time frame. So we're starting to see it curl over just a little bit. Going to want to watch this disparity, right? The differential between these two sectors. Technology versus energy, same concept. Since technology is the first market, if this is pointing up, technology is stronger than energy. If it's pointing down, then energy is stronger than technology. Basically, since the first of the year, energy has dominated technology. That's bottomed out. We're turning it around, kind of pointing back in the other direction. That technology is starting to overtake energy. Want to keep our eye on this as well. You can see we kind of faded back multiple times. We want to make sure that this trend doesn't get broken, right? That energy doesn't start to dominate against tech again. It's going to be another sign that this rally up is fading off. Small caps have been doing pretty good compared to, say, large caps. So this is large caps versus small caps. So when the indicator is pointing up, large caps is doing better. When it's pointing down, small caps are doing better. Since the first of the year, it's been kind of passing it back and forth. But I would say in the last month, small caps has really dominated on this thing and broke trend. And stocks versus bonds. Since stocks is the first word, when it's pointed up, stocks are doing better. When it's pointed down, bonds are doing better. Since that June low and the rally back up out of it, stocks have been doing better. Makes sense, right? Everybody's piling back into equity, back into tech stocks and all their favorite beat down markets. And then there's one hell of a short squeeze going on out there right now. And so we're seeing this pointed to the upside, but we want to keep our eye on this, right? See that those bonds start coming back in. The most shorted stuff is what is getting squeezed right now. So the Reddit crowd, the GameStop stuff, but also pot stocks really fit the bill there, right? When we think about the sector be down the most, pot stocks. I thought I had a list of the largest short. That's dark pool. Where did I put that list? No, I'll have to find it again. But you're going to want to get the list of largest short float, and maybe keep your eye on the pot stocks over the next few days because they're getting one heck of a move. Right, a lot of flows coming in. Those trapped traders getting squeezed. You're going to have one heck of a move. That's what I got for you guys. Be careful, be safe, have a good one. If I see anything today that looks good, I'll give it a shout out. Otherwise, we'll see y'all tomorrow.